Hello everyone, and welcome to this particular video that I'm making because of trying to break down the government shutdown, the US government shutdown. So we have had a lot of uncertainties in the markets, and in this video I just want to demystify what is government shutdown, how does it happen, or what is the process of a government shutdown, which services are mostly affected, and maybe probably the implication in the financial markets. So my name is Timothy Carrier, and stick with me through, and let's dive into this. So when you talk about a government shutdown, basically what you are referring to, especially in the US government shutdown, this happens when the US Congress basically fails to pass funding or enough funding bills for the federal government, and therefore you find that now the government is running without insufficient funds. So what happens, since the government really needs money to operate, when the funding expires, many agencies must stop or scale back their operations until the Congress and the president agree on a budget. So you can think of it like a business running without money to pay employees and bills. So it can't function normally until new funds are approved, all right? So how does the government go into a shutdown, or the process? What is the process of a government shutdown? So in the US, you understand that each year the Congress must pass at least 12 appropriationary bills to fund the government operations by the start of the fiscal year, October 1st. So yesterday we saw that by the close of the close of business yesterday in the US, the Congress had not yet approved all the 12 appropriationary bills, and therefore it means now the government enters into a shutdown because if the lawmakers can't agree, maybe probably due to different reasons like partisan disputes, policy riders, or spending levels, then the funding lapses. And when the funding lapses, then what happens is that the shutdown begins. Okay, so how does the shutdown begins? The federal agencies receive instructions to suspend non-essential activities or non-essential government activities. So, for instance, workers are either sent home without pay, or they are asked to work without immediate pay until funding is restored. So they can either be sent home or requested to work, and when the funding resumes, they can be able to be paid for the duration that they worked without a pay. So again, you need to understand that the shutdown doesn't really happen forever, because there is the reopening of the government. Okay, so once maybe probably we see the Congress in the US, if we see the Congress maybe probably passing funding bills and the president signing it, then the agencies will resume normal operations, and most federal employees receive back their pay. Okay, so it is also important to understand when we have a government shutdown, or when we talk about a government shutdown, what are these activities or services that are affected, because not all government operations are really shut down. Okay, so you need to understand that whatever is really affected is the non-essential services. Those are the ones that really shut down literally, like shutting down. So, and they either shut down, or maybe probably they can also be reduced. Okay, they can also be reduced or shut down. So for instance, we are talking about national parks, museum, and monuments. We are talking about many federal regulatory agencies, like maybe FDA inspections, all right, which slows down. We are talking about passport and visa processing, whereby now we might be able to witness the delays in terms of passport and visa processing, and also now in terms of research and grants through agencies like NIH and NSF, and also maybe probably even the agencies like the AGOA that we found. The agencies like AGOA. Okay, so you realize that also many federal workers, e.g., for instance, the administrative staff, they are forced to go home because of lack of enough funding. Okay, so The other thing that you need to understand is how does the government really shut down. I mean, we have demystified how the government shuts down. So what you need to understand is now the effect on the economy, or the impact on the economy. All right. So the impact grows worse the longer the shutdown lasts. Okay. So the impact will be worse for the longer duration that we see the shutdown last. So, in terms of government workers, about 2 million civilian workers plus contractors can be asked to maybe probably stop working, okay, and be sent home. So, also when you look at it in terms of consumer spending, you need to understand that um, um, workers who are sent maybe home, or maybe probably they have to work maybe and be paid later, then these cut back on spending and therefore hurting the local businesses. Okay, so if you look at it in terms of markets and confidence, you find that for investors there is a lot of worry about the political dysfunction, which can really shake the financial markets. And we have been able to witness some of these volatility in the markets today. We are looking at the markets not really obeying the market structure. So the markets are moving just up and down randomly without really obeying the market structure. And this is because of the uncertainty that is there in the financial market currently because of the government shutdown. So if you look at maybe probably the aspect to do with the GDP, that is the gross domestic product, basically what happens is that during shutdown, you find that the Congressional Budget Office estimates that a full shutdown reduces the US GDP growth by about 0.1 to 0.2% for every week that it lasts. So you can imagine now, the longer it lasts, therefore, it means the more high impact it will have in the economy, right? So when we look at it, maybe probably we narrow down now to the financial markets. So, like for instance, the U.S. Stocks, that is the equities and the indices like S&P 500, the Dow Jones, and the Nasdaq. Basically, if we look at it, the effect of the shutdown in the markets, the effect of the government shutdown in the U.S. stocks market, we can look at it in two ways. Number one, there is the short-term reaction. That is whereby you find if you realize that the markets usually dip slightly because of uncertainties, especially if it looks like a prolonged shutdown. So investors, they really hate uncertainty, and the reason why you see the market gaining some volatility again, depending on the investors' sentiments. Okay, so if they are going to perceive, investors are going to perceive that the shutdown maybe probably will prolong, therefore there will be more uncertainty, and therefore meaning more volatility or more impact. But if they perceive that maybe probably the shutdown is maybe probably due to political dysfunction and it's gonna not last for long, therefore what really happens is that the market will have just slight dips, okay, especially the stocks market. So looking at the historical patterns, most shutdown that we have seen in the US have been short, okay, and the market has always recovered quickly once there is the reopening of the government. For instance, if you look at 2018, 2019 shutdown, the US government shutdown, the S&P 500 had more influence from the Federal Reserve policies and global trade than the shutdown itself. Okay, so if you look at maybe probably now sector-wise, especially the sectors that will be mostly affected by the shutdown, you're talking about the government contractors. So sectors like the defense, construction, IT services, which are tied to the federal project, are highly impacted. Also, sectors like tourism and airlines, because due to closed parks, delays in immigration processing, this really makes these industries, the tourism and airline industry, to delay because it's categorized as a non-essential services, government services. Okay, so and maybe probably if you look at the financial sectors, due to delay of economic data releases, like maybe probably NFP, CPI, inflation, this makes planning even harder, and therefore companies in the financial sectors really perform poorly during shutdown. So if you look at the commodities market, especially gold and oil, and maybe probably some of the agricultural commodities. So if you talk about gold, gold is a safe haven. We have seen even today gold rallying and creating all-time highs. Okay, so because gold tends to rise slightly during shutdowns if investors see prolonged political instability. So there is the capital shift into gold and US treasuries. That means investors, they feel safe investing in gold because it's a safe haven, basically to protect their money from maybe probably inflation or something. And also you find that during that time the US treasuries, like the bonds, they are usually really highly demanded at that particular time. So oil, basically we usually seeing minimal direct impact unless the shutdown drags on and maybe probably delays the energy reports, like the energy reports are data. Therefore, you find that traders may also see the short-term volatility from lack of official US inventory data, and therefore you find that oil prices can also be affected. Right. So if you look at the indices, like maybe probably the volatility index, which is the fear index, it usually spikes during shutdown threats because of uncertainty. And if you look at it even today and yesterday, we see some bit of spikes. So if you look at the major indices, like the major indices, basically what you're talking is some short-term volatility, but rarely a long-term trend unless the shutdown is prolonged. Okay, and what we have seen today is some of these congressmen trying really to try to come into terms and solve the issue at hand, so that maybe probably the government can be reopened as soon as possible. If you look at the financial markets, especially the forex market, that is the currencies. So the US dollar, we are looking at it maybe probably a weaker US dollar. Why? Because when the government shut down, therefore it tends to weaken the economy, and the dollar might be affected negatively, and therefore this could weaken the dollar index could weaken slightly if the market sees the shutdown as a political dysfunction, and that is also due to loss of investors' confidence. However, you need to understand that during global uncertainties, the US dollar sometimes strengthens as a safe haven. So the direction depends whether investors see the shutdown as a minor noise or as a sign of deeper instability. So it all depends on the investors' sentiments. So if you look at now, guided on that, if you look at maybe probably the major currency pairs, Euro USD, GBP USD, so these ones could gain if the dollar weakens. If you look at USD, JPY, USD, CHF, the dollar may weaken against maybe probably JPY, CHF, because traditionally JPY, CHF, they are regarded as safe havens. That is traditionally. So if you look at the emerging market currencies, a shutdown may strengthen the dollar against the riskier currencies. So what is the bigger picture? What are we talking about? So there are two things that you need to consider when we talk about the shutdown. Number one, if the shutdown is short term, then market will shrug it off after a few days. We'll be able to see the market now being able to shrug that or accommodate that basically after a few days. But if the shutdown prolongs, therefore, it means we might be able to witness mixed government reports, especially the job data, the GDP, the inflation data. And this data is very key in terms of planning ahead. So traders, if we miss this kind of data, traders definitely lack key economic signals. Okay, so that means that also If it drags on, that is, if the shutdown continues to persist, therefore, also we might look at lower consumer spending, okay? Lower consumer spending because workers have been sent home or they are working without a pay. And therefore, it means that lowers the consumer spending. So if it lowers the consumer spending, then there is the potential drag on GDP. So we might be having a bearish stocks market as a result. Okay, so investors may rotate in defensive assets like gold, utilities, and maybe probably healthcare stocks, basically to try and absorb the effect or the impact of the shutdown. That is trying to rebalance their portfolio. Right. So in conclusion, basically what you're talking about, if you're looking at the stocks market, we are looking at minor dips, for especially for specific sectors that have been hit, like the airlines, the tourism sector, the financial sector, as we have discussed. If you look at the commodities market, we are expecting gold to rally up. All right. The indices, we are expecting high volatility, especially for the volatility index, that is the fear index. In the forex market, we are looking some, maybe probably some either a weak dollar or some mixed sentiments for the dollar, because it could weaken from the dysfunction or strengthen from the safe haven demand. Okay, so that's how you need to look at it, the shutdown. And remember, not all government activities are shut down. So what is shut down is the non-essential services, government services that we have talked about. But there are the essential government services that will still stay open, like for instance, the military, the air traffic control, the border security, the emergency medical care, the social security, the Medicare payments, etc., etc. Those are critical services that they will have to remain running irrespective of how long the government shuts down. So with that, I believe it's insightful. You'll be able to look at it and be able to digest in terms of maybe probably which position are you going to take, especially if you're trading the forex market. If you're in the stocks market, you know how now to eyeball your entries, okay, or how to look at what maybe probably you need to invest in, okay. So thank you so much. Stay tuned. In case of any news that emerge, I will definitely be able to update you. I am here to digest this information for you, making it easier for you to be able to understand it, use it at your advantage, and take advantage of the opportunities that might present themselves in the financial market. So until next time, see you and take care.